Hey everybody, welcome back. Sive here with the Forex Peace Army.com as usual. So let's take a look what is going on. Well, yesterday we said that currently the situation is developing in the way where we have to increase the scale of the analysis, because all the short-term stops that might be used were either completed or erased by the recent collapse. And since swings are becoming really big, it makes us to start watching for some bigger scale. So a few moments just to mention, so you wouldn't lose in the current environment, so you understand where we are going, what actually might be, and in general what particular levels to watch for. First of all, let's return back to the monthly chart. As on the euro currency, as on the dollar index, we have huge monthly Gartley 222 pattern. So on the euro currency, this is Gartley's 222 sell. On the dollar correspondingly, Gartley's 222 buy. What does it mean? It means that euro could show at least 30% retracement. This is typical all-time minimum target for Gartley's patterns. 30% retracement means 110 area. That's what might happen in general on the euro. Today, I don't know whether it's fake or not, but quoted the Politica journal, it was pointed that Pentagon intends to endure the operation against Iran for 100 days, approximately until September including. So it's absolutely a different environment to what we actually have now and what market expected. Since we do not see yet any reaction, probably the reliability of this news raises some questions, but at least this is information pointed as a political source. So from that standpoint of view, 110 retracement is absolutely impossible on a background that now stands around the European Union. Besides, it's not really something outstanding, it's normal reaction. And also recall that on the euro currency around 112 area, 112.50, we have yearly pivot point. In most cases, market tries and tends to touch the pivot point through the year. And currently it seems that background is rising, is ripening, developing for possible action in this direction. So that's about the bigger scale. In a shorter term scale, on the weekly chart, for example, on the dollar index, you could do it even in a better way, but here is as well. So as I already pointed, that theoretically we could consider here this performance in kind of the hand and shoulders pattern that actually could put the background, put the starting point for a deeper retracement. It means that currently we are going to the 114, 114.50 area, where potentially the neckline might stand. So with the performance that we see here, this scenario seems quite possible, just because you do not see any meaningful upward reaction from the market. Market just collapsed, hit the deeply oversold area, and then no response. Just some sideways action without any attempt to go out of this condition. It means that market is held just by oversold technical area, which means that when it will abandon it, for instance next week, it once again proceed lower. So currently situation looks bearish. Another reason why I think that it might happen, and actually why I think that it's bearish, if you take a look at our recent setup on the 30-minute chart, what we talked about, or if you remember, based on momentum trade, we said consider this level and that level for possible position taking and so on. You could see that market was not able even reach the OP target as a 50% resistance level, despite that it was strongly oversold. All the market was able to do is just reach the confidence resistance that was specified for a possible taking short position, and you can see market now is going lower. So this is also some indication of the additional bearish pressure that exists right now in the market. So mostly our short-term setup right now is done. So you can see that momentum trade here it hasn't quite reached the target, but probably this might happen in the nearest few hours. It's not already important to us because those of you who have position, you're already carrying in with the break-even stop. So I'm sure that you have placed here the break-even stop and just watching for when the target will be completed. For others who just haven't taken the position and in general missed this trade, you do not have currently anything to do because we do not have any new trading setup. We don't have any new patterns. We need to see what will happen next, because as how usually the trading process works, how market swings structured. It's starting from the very small swings patterns. Once they complete some setup, you have to increase the scale. So something is forming on a bigger scale, then increase more. This is like the fractal or like the nested doll. So for instance, I'm sure that if you will drop your time frame to the 5-minute chart, you will find here a lot of patterns. So it might be the butterfly. Here is was the kind of the hand and shoulders, something like this. Then we use this big ABCD as the target. On the full time frame chart, it has become kind of the garter's triple to sell, right? So this is another big pattern with this selling butterfly once again, and so on. Now we just need to wait a slightly increase of the scale when this target will be done. What particular might be formed? For example, it might be either double bottom formed, or we could get some kind of the garter's triple to buy, or maybe we will get some bearish pattern, something like this. Downside continuation, no, maybe market will start turning to some triangle consolidation here. Different scenarios are possible. So in the current circumstances, right now, I do not see lots of trading opportunities on the euro currency. Those who have bearish positions, you probably could hold them until target will be completed. And let's start preparation for tomorrow data releases. Finally, we'll get some data that might just bring some fresh view on the market, as it currently is totally dominated by the political news, and see what will happen. Maybe we will get something new, some new ideas that we will discuss in the weekend.